Welcome back. You're watching Editors Roundtable. We have a guest joining us now. Pramod Gubbi is joining us. He's co-founder of Marcellus Investment Managers. Pramod, good evening. Thanks a lot for joining us. The key highlight for this market has been the sort of return of FI buying, right? But there's also this debate that what we have right now is hot money sort of replacing some of the more sort of strategic money. We've seen so many block deals, for example. Your thoughts?
Well, like I said the last time also, I'm not the best person to answer what type of money is coming in. But I think in general, you can see a sense that people are getting more comfortable with the interest rate hikes, although yesterday's minutes suggested that we are not done with. I'm sure there is more to come here. But I think broadly people reckon that inflation is coming under control, and therefore maybe we don't see that much of a tightening as we had once envisaged. That seems to be sort of driving flows towards risk assets, including equities and emerging market equities. Within that, I reckon India is being seen in more positive light from whatever conversations we've had with offshore allocators. India is increasingly being seen in more positive light, partly given what's happening in China, and China is a big part of the emerging market index. And if people are concerned about what's happening in China, they are looking for alternatives. And I think in terms of the size of the economy, India clearly stacks up. And there are very few alternatives within the emerging markets that can offer this sort of capital deployment opportunity. And from our own perspective, I think India has done well in terms of keeping the economic conditions in good shape despite the headwinds that we've had to face. The banking system is in good order. We've seen credit growth coming back after a long time. Earnings season hasn't been that bad, and more importantly, we've dealt with inflation better than a lot of other countries, better than ourselves in the past. So I think a lot of boxes are being ticked for India just when some of our emerging market peers sort of not doing great for themselves.
Pramod, hi. Do you think banking and financial services as a sector, what will it take for it to start to really fire? Some of these block deals data, etc., that I was presenting earlier, very large funds like Capital, etc., although they've only bought back a small portion of what they sold in the preceding 9 months, is the preference banking financial services? One doubts it, looking at the kind of transactions which has happened, or price performance for that matter. Any thoughts there?
Yeah, I mean, we've been quite positive on the financial services sector. So we don't know what other investors are thinking, why they're buying or selling. But we reckon there are a couple of tailwinds, structural tailwinds, I would say, for the financial service sector in general. One is the financialization of household savings in the country. Despite global interest rates going up, India's mortgage rates are pretty sensible, right? I mean, I can't think of a time when U.S. mortgage rates were around 5.5%. India is around 7%. There's hardly any difference there. That clearly demonstrates a structural reduction in cost of capital in India, and a lot of that has to do with the financialization of household savings. A country which historically has been sort of enthralled by real estate and gold as asset classes has seen almost a decade of pretty healthy flows into bank deposits, mutual funds, small little PMSs like ourselves, insurance penetration going up. So we've finally broken out of that physical asset mold where savings is flowing into financial assets. That's a big structural tailwind which is likely to last for multiple decades. And within financial services, we reckon there is a significant market share gain story that's happening, given the predominant presence of public sector in the past. I think some of the better run private sector banks, NBFCs, private sector insurers, both life and general, have significant opportunities to gain market share. So a double tailwind, I reckon, puts financial services on a structural growth path for the next couple of decades at least. That's the sort of range that we're looking at.
Sure.
The shorter term could be anybody's guess.
Okay, Pramod, I just wanted to take that point forward with regards to FIIs probably looking at investments from a more strategic long-term standpoint and tie it in with the fact that there was this big deal which took place in the hospital space. where Max, KKR exited Max Healthcare, but there was enough interest which we saw in that. But separately, something like Apollo Hospitals has lost quite a bit. It was the top loser on the Nifty this week, and they're not getting that funding that they're seeking, at least as of now, for their digital arm. Would that space interest you from a long-term standpoint at all, the hospitals/healthcare sector?
Not really. I mean, historically, it hasn't come up in our screeners. One of the key parameters we look for in our screeners is consistently high return on capital. That's been missing from this sector, at least, every now and then you do see high returns on capital, but not consistently enough for us to look at this sector. Partly because I reckon, given, these are capital intensive, asset heavy, some of them are moving to asset-light models, but by and large, real estate is a big input component into hospitals. And that's perhaps been a drag on return on capital. But as the sector matures, I reckon more asset-light models will emerge. So structurally, the demand story is fairly intact. Indians are becoming more affluent, and they can afford better healthcare services, and the country needs healthcare services. So to that extent, the demand side story is all right, but we'd like to see better returns on capital in the sector.
Okay. Pramod, we've run out of time, but one very quick question before we end the show. We were just talking about all these new launches that have come out from the auto sector. Is this a space, I mean, it looks very exciting with stocks at record highs and new launches, but is this a space that's become a bit of an overcrowded trade now, or do you think there's still more to go?
I'm not sure about the overcrowded nature, but I think autos do pose a structural long-term opportunity, given, like I said, if India were to grow from $2,000 per capita GDP, you do hit that sort of inflection point where there will be significant savings coming through, people moving from spending on staples to discretionary. The auto is perhaps one of the more, first items to take on the discretionary front. Penetration, primarily in four-wheelers, to some extent in two-wheelers, is still a long way to go. To that extent, the structural growth opportunity is intact. But I think there have been a few supply-side challenges around semiconductor availability and so on, but those are more shorter-term challenges. In my view, for longer-term investors, autos and auto ancillaries have always provided plenty of money-making opportunities across the globe, across cycles.
Pramod, we'll leave it there today. Thanks a lot for joining us. Before we wrap up, we didn't discuss the stock of the week, PVR. 15% down. Are you guys not watching any movies? Sonia,
I don't like
I'm watching it at
to the
home.
theatres. I'm very happy watching it in my home and at my own comfort. I feel that I don't have any patience levels left anymore after COVID, I think,
Yeah, but the content has really been very disappointing.
We were discussing this earlier in the morning.
This is the only reason.
The only movie that I've watched is Top Gun in the theatre. After that, I have no feeling, no desire to go to
it. I've seen KGF as well. I've seen Bulbulaiya too. But the last few movies, I believe, it's just been too bad. Just rehash of the previous film.
And trends are also changing, right?
Absolutely.
People don't really want to go to the theatre anymore. Okay, but anyone buying the new car, the K10?
I was just going to say that Pramod mentioned overcrowded trade, but it's overcrowded cars on the
Too many
road.
cars
You
on
can't
the road.
differentiate one from the other for me.
Yeah, but the new one's not bad, I mean, it's just
Which one?
4 lakhs.
The K10.
The new Alto K10. You can zip around with that
Absolutely,
small car.
and parking won't be a problem.
And parking won't be a problem. All right, guys, have a great weekend. Thanks a lot for tuning in to Editors Roundtable. We'll be back again Monday morning.